The RAC report for July 28, 2026. 5 stories tonight. NVIDIA puts $5 billion into Ilya Sutskever's safety lab. Satya Nadella says companies that rent their thinking will not survive. Fitch calls an AI correction a global credit risk, a first. AI answers now front nearly half of all Google searches. And shared Claude chats turn up on Google search. NVIDIA is putting roughly $5 billion into Safe Superintelligence, the stealth lab Ilya Sutskever founded after leaving OpenAI, with priority access to its Vera Rubin GPU platform. The deal expands SSI's compute tenfold within 12 months, and it is NVIDIA's largest direct investment in an AI safety lab. NVIDIA already holds a $30 billion stake in OpenAI. It now has money on iterative deployment and on foundational safety, both sides of the argument, one balance sheet. The Timing writes its own headline, 6 days after OpenAI's autonomous models breached Hugging Face's production systems. The problem SSI exists to solve keeps advertising itself. NVIDIA now has a stake in the crisis and a stake in the cure. Either way, the GPUs get paid. Microsoft CEO Satya Nadella told CNN that business is outsourcing their thinking entirely to a single proprietary AI lab risk extinction. His word, more or less. His prescription, separate your AI harness from the model underneath, and keep every scrap of metadata, enough to build your own weights when the time comes. He named the targets, vendor-locked coding agents like Claude Code and ChatGPT Codex. And the advice happens to describe exactly what Microsoft's cloud sells. It lands on fertile ground. Enterprises are already drifting to open-weight models and multi-provider setups, partly to dodge lock-in, partly because the labs keep competing with their own customers. The man who sells the infrastructure says don't depend on one vendor. He would know. He is one. Fitch Ratings has formally flagged an AI market correction as a major global credit risk, the first major ratings agency to say so at a systemic level. The concern is the capital expenditure, the hundreds of billions Google, Microsoft, and Amazon are pouring into AI infrastructure, and what happens to credit markets if the returns never show up. This is not a blogger calling a bubble. Ratings agencies move debt prices. When Fitch says systemic, lenders reprice. The warning does not say the correction is coming. It says the exposure is now large enough that if it comes, it does not stay contained in tech. When a ratings agency starts saying bubble, it is not predicting the correction. It is pricing it. New Similarweb data, Google's AI overviews now appear in 43% of all searches, up from 15% 1 year ago. AI mode visits more than doubled, from 126 million to 279 million a month. AI search is becoming the default, not the experiment. For publishers the trade is one way, AI citations do not drive clicks, and the referral traffic that built the open web keeps thinning. Cloudflare is selling the countermeasure, tools that block AI crawlers unless the AI companies pay for content access through its marketplace. Google spent 25 years sending you somewhere else. It has decided to keep you. A Reddit user found that Claude conversations and artifacts marked shareable were being indexed by Google Search, publicly accessible, no login required. VentureBeat verified it independently, dashboards, documents, working applications, findable by anyone with the right query. Anthropic's response, shareable links are publicly accessible content, and third-party services may archive them. Technically true, and not what most users thought share meant. By Sunday morning most of the results had vanished, which suggests corrective action. The concern stands, Anthropic is pitching artifacts as a workspace for business assets. The share button did exactly what it said. Nobody read what it said. That is the RAC report for July 28. 5 stories, sources, and the full rundown in the description. Subscribe. The news continues whether you do or not.